Okay, now welcome guys to the training session using Guerrilla Trader and T-Rex for your live trading opportunities. Now, this is sort of important and something that you'd really need to consider because it can, using both tools, can take a lot of pressure off you when it comes time to placing trades. Now, first and foremost, when you are sort of first starting out trading, right, I've got to say, you're not going to be really trading multiple instruments at once, okay? Or you shouldn't be, right? Because it takes time to develop. So if you're looking to trade, say the bottom four pairs here, right, which all correlate, euro, sterling, Aussie, Kiwi, right? And say we've got a big US dollar number coming out, and I mean I've got the dollar index there to sort of tell me a bit more about what the dollar is doing against all the other currencies. But say we do have a US dollar number coming out, and it's going to impact these four instruments down the bottom, as well as, you know, equity indices and the yen and CAD and Swiss. But what you get very often, the top pairs will be correlating whether they're going up or down, and same with the bottom pairs. But occasionally you do get opportunities where we have a US number, right, and it's here, and euro might be set up for a move to the downside, and sterling might be set up for a move to the top side. Now, until you start sort of making, you know, cash and making some sort of consistent inroads to building capital, you're probably only focusing on the one instrument that you feel confident with, right? And that may well be on a US number. It could be any one of these instruments, right? Dollar CAD, you know, always a little bit tricky. Dollar yen, it's caught up in the whole weak yen scenario. Dollar Swiss, well, it's rocking and rolling. The Swiss National Bank aren't happy with the value of the Swiss. So it leaves the four bottom pairs in particular are a bit more open to, you know, moving very freely. So we may have situations where you are looking to trade, say, multiple pairs. And as I'm just sort of saying, like if you're starting out, just trade one pair. If you start having some success, well, then we can expand it into a couple. But I want to go into the situation where and why I sort of stressed that to start with was when it comes time to, let me just get my MT4 up, or MT5, I should say. When it comes time to trading these instruments, now you just want to have a good grasp of what's going on. So now let me just go back to that scenario, right? Just where we have, and after the non-farm payrolls on Friday, you know, stronger dollar outlook. We've got that week, or the French snap election. If anything, it's stabilized. It's like a change of government, unless there's something really extreme, isn't a major thing, right? Of course, we saw Donald Trump come in, and it sort of did change things as time went on. But initially, yeah, there might be a little bit of a knee jerk. It's gone down 20 points and bounced back 40. So it's nothing really going on there. But now let's just assume, right, just for the time being, that we've got a situation where we do have a US number coming out. Euro is, say, here sitting above that support trend line, and sterling has been going up and potentially looking for a move to the top side. Now, in this situation, right, there's a couple of things you can do. Now, it can be a little bit complicated trying to place a sell order, right, on euro, and a buy order trying to get the move up on weak US numbers on sterling, right? You can do it, but it is a little bit convoluted, because what you would have to do is you'd have to place T-Rex. Okay, now I've got sterling up here. So what I would be doing in this situation, right, you have to be like super organized. And the problem with this is that you have to spend too much time looking at the screens. And I'm only telling you this because I did it about 2 weeks ago, where I was caught up in trying to work out what orders I had on, which ones I had to take off, and I couldn't see what was going on in the market. It was a major distraction. But what you could do is, say, for instance, I'm looking to go long, and like it's on a knife edge as well, right? So an OCO breakout in this situation could well work, right? Or because we're looking for, say, a sell stop on the downside of euro and a buy stop on the top side of sterling at the same time, looking to capture a move on a weak number, weak US number, or a strong US number, and the two currencies have two different setups, well, you'd have to go in with an OCO breakout, right? Now, if I place an order here, have I done that? Okay, well, actually, I've just placed one. This is what actually, as I was saying, what you would be doing on one pair. So we've got sterling. I've just placed a buy stop and a sell stop. Now, in that situation, if you were just trading one pair, right, you wouldn't actually do that. Because we're looking for a move to the top side, I would just place a buy stop and you sit there and wait for the numbers to come out. Now, why are we placing a pending order, say, on a US number, which could go either way? It's because the market is sort of finely balanced. And if it's a big number like an inflation number, you are going to see it take off. So what you would do is, I would generally suggest you put a part of your trade into a pending order, right, to capture the first move. Now, understand, if you've been through the course, when we do that, there is risk involved. Okay, so we're trying to buy sterling as the market's moving up aggressively, right? So in that situation, there may be some gapping. If the number had high variance, well, we may have our order here at, say, 127.37. It gets set at 47, right? That means we have to think about, okay, now what does that change for us? Do I stay in the trade? Do I look to get out? And a range of different other options that you need to consider. So I would place a part of the order there and then trade the other part of the order live if I was in front of the screens, right? I would never go maximum risk with a pending order, primarily because at the time of entry, you lose control of the risk momentarily. Now, if you get set at the level, well, that's well and good. But don't forget, we are looking for sort of medium to high variance, not high variance really with pending orders, because with high variance, you do get the gapping and you can get slipped around. It moves your entry order from the ideal zone, right? That's just a bit of extra information there. So now that's all great, right? So say you become a little bit more advanced. You are making some money. So you are looking to take advantage of euro and sterling in this situation, right? So now, because we're looking for moves in either side of the market, you can't just come in here. Like, well, you could come in and have your chart set up for euro, right? And then you could get T-Rex up here on, on your euro. You got your sterling already set up. We want to place a sell stop on the downside. You want to place a buy stop on the top side. So I've got these two currencies set up. Now, I'm telling you, generally speaking, we want to have these orders go into the market about 5 seconds before the number comes out. If it's 10 seconds, there's more volatility. You usually get a bit of volatility, and then in the last couple of seconds, it stops, and then it goes mental. So what you could do, right, focusing on this, is just go place, come over here, hit place on both instruments, then watch the market, right? That's something you have to do. But let me just run this by you. What are you going to do if the US numbers come out strong, right? That means the euro order will be triggered, right? But this sterling order will be sitting there. And say there's a bit of variance in the number or a bit of gapping, you can often see things spike around the place. As soon as that doesn't get triggered, you want it canceled, right? But don't forget, when at this time, right, invariably, you are looking at the markets, right? You're looking at the markets over here, or you're looking at the calendar, and you're trying to work out, okay, so do I stay in the trade? What was the minimum maximum range? What was the actual versus the forecast, and these sorts of things. So sometimes you don't get time to have a look. And when you come back to your platform, your sterling order may have been triggered. So you got to take time away from the market to have a look at that. And then you can actually come back and hit, okay, I need to close out the sterling order. But that could take 30 seconds, right? That's 30 seconds of exposure that you don't want to get triggered because the numbers came out strong. Now, the euro order would be triggered. Now, another way to place that order in the market, I think placing two single, one buy stop entry on sterling, one sell stop entry in euro, okay, it's a little bit more control. If I go, what I was going to say is you could go in here with an OCO breakout, Okay, turn the cross manager on. Now, if I just come down here, find euro and sterling. Okay, so by adding both of these to the cross manager, I just X that out. I could just place the orders. But in this situation, okay, you're going to see, okay, I need to look up, okay, I don't want to go long euro. So I'm closing that one out. And I do not want to go short sterling. So I'm closing that one out. Now, if you did that 5 seconds before the numbers, not only would you be freaking out, right? You'd be like, oh my God, this is like crazy. Don't make a mistake. And you could well cancel the wrong order, right? And then you sort of caught up on various things, right? So what I would be sort of doing is that could be a little bit convoluted. Now, let me just come back and just say, let's turn the trade cross manager off. And just for good measure, I like to take these things back across the other side so I don't make a mess of it. So you can see just by trading one instrument, right? If I wanted to place an order and I've got euro back up here, and don't forget, in this hypothetical situation, we're looking for a strong US number and we're looking for euro to sort of break down, right? So we're thinking it's here, right? And just don't think about that's already there, because what we want to do is capture the move. So we're looking to place a pending order below the market. We get strong numbers, we're making money, right? And usually strong numbers means probably hopefully above the maximum forecast of the range. So with that situation, it's very easy just to place an order below the market, okay? You get set in the market itself and away you go. Now, make this thing easier for you. Now, I set up Guerrilla Trader as a tool to basically allow me to trade the markets. Let me just remove T-Rex. Okay, when I wasn't at the screens. So I could set up, because I basically know, and this is what you should be sort of thinking as well. Let me just come back to some of these numbers. Let me find a US number here, right? We'll focus on the CPI number. So we know, generally speaking, right? So we've got these numbers here, which is the focal point. Of course, you got the core numbers here, but this is the number that we're looking at. The Reuters poll is 3.4%, and the range for the US CPI number is 3.2 to 3.5. I know at a set time, this is the best thing about the economic numbers, at that set time, if the number comes out greater than 3.5%, the dollar will rally through the roof, right? We just know that because it's an inflation number, that it has an impact on the Fed forward guidance and interest rates, and it will force the dollar up. So all I needed to do was build a tool that enabled me to place the order in the market on a certain move. Now, years ago, we did attempt to set up a robot. I'm talking 15 years ago. That was a robot set up on a server, which actually had numbers in there. It said if it's 3.6 or above, just buy dollars, right? We spent close to 200 grand on that and actually didn't really get it working properly. It's a bit of a failure. But what we could do is we could build a simple tool that identified moves in the market. So go long dollars if the number is above this level. So in that situation, and you will know over the course of time, the more experienced you get, right, the more you can sort of leverage into the opportunity. And when we are looking at dollar moves, okay, we do get situations where we have multiple trading opportunities across multiple pairs, okay? And you may have 4 really good setups or 5. Now, you can either determine to go into 1 or 2 of those, or actually really expand and go into quite a few of them. Now, sometimes, as I said, the setup will be such that we have a good opportunity on the downside in one pair and a good opportunity on the top side in another pair. And that allows us to, well, take advantage of the move either way, as long as we get that level of variance in the market. So the best way to do that, and this is where Guerrilla Trader comes in. Okay, so just looking at Guerrilla Trader. So what I would be doing is take the pressure off yourself. So trading one pair using T-Rex, using a pending order, or trading live is easy because you can focus on the number. You just hit buy or sell, whichever side you're looking at. So to use Guerrilla Trader, though, it allows you to potentially take advantage of one side of the move. Okay. So if I go today, now just looking at my screen, it's 10:17. Okay, 10, it's 17. Okay, let me just place this at 10:18, right? So expiry seconds. Okay, so what I'll do is, just to show you exactly what I would be doing, 17 and 55 seconds. And what you can do is, just to be sure, because you only want this thing to activate on the number. So I would say go 10 seconds. So it's going to be activated in 30 seconds, right? So I've got that set up. So I can hit OK. Actually, you know what? Let's just get in there because I do not want, I only want one side of the market. Okay, that's set. I can come over here. It's buying on there. I can place an order on euro and I can watch euro. I can actually sit there and actually trade euro as we get going. Now, in 1 second, this order will come on. Hopefully it's connected to my screens. Let's have a look. Okay, so the order has gone on. Okay, you can see down here, sterling. Now, that order should drop off after 10 seconds, unless I just change the setting. There you go. It's cancelled off the screens, and the euro should be in play. Right now, you have the choice of either selling euro, and say, for instance, in this situation, you do get a really strong number and euro gaps. Well, you're not going to have to worry about cancelling your sterling order. It's already gone. Okay, then you can just focus on the euro and basically look for the what you've got to do. Do I need to manage this? Did I get slippage? You know what? Do I need to add to the trade? Can I trade live and add some more to it? You basically making decisions without worrying too much about sterling. Now, as a backdrop, okay, if sterling did get triggered and we got really weak US numbers, well, sterling's probably going to be up here somewhere. You can easily cancel your euro order, switch over to the sterling chart and have a look what's going on there. Make sure, have a look where you got into the trade. Okay, was there any slippage? Did you get in at the right level? Are there more levels to be sort of potentially buying sterling? And you do not miss the opportunity. Okay, so it is about covering both bases, right? But you've got to be careful here because if you go in with the wrong attitude, right? And what I'm saying there is if you go in looking to sell, and I'm saying in this situation, we have two very good technical setups. One, which was looking for a long sterling move, and one for a break of euro down, right? Only do trade multiple pairs if you have multiple technical setups. If we have a situation, right, where, let me just come back to sort of the reality now, okay? And if I sort of come back to sort of sterling and euro at these current levels, if I was looking to capture a move here, top side, euro and sterling, okay, or looking for one side or the other, the current setups don't match a really good technical setup, right? So especially euro, it's in the sort of middle of nowhere. So you can't really start spraying the market with pending orders. And this is what we see a lot of from new traders who join us, right? Because what they can see is they can see dollar signs, right? And you go, you know what? I understand what Brad's saying, but I can actually basically place pending orders here on all the pairs and try and capture the move across multiple pairs. And hopefully, you know what? Only one side gets triggered. Now that is true. You could, right? And in particular, if the data was medium to high variance, so not too far outside the realm of things. Okay, so if I just came back and used that US CPI as an outcome again, so basically, if the number came out at 3.5%, we would get a dollar move. Okay, strong dollar move. It's not going to really gap anywhere. But if the number came out at say 3.8, right, you are going to get a serious move and there's going to be carnage. So when you come back to your charts and you look at your entry levels, they could be all over the place. and there could be huge volatility across all these instruments, and it could be a bloodbath. You may have one winner and 3 losing trades, or all losing trades. They just got knocked out on the volatility at the time of the release, especially, say, for instance, if you were trading non-farm payrolls. That's where I've seen it occur the most. Okay, so you just got to make sure you're picking the opportunities. Right, so just let me recap that, right? So you are generally looking to take advantage of multiple pairs, say 2 pairs, once you understand how to trade live events on their own, right? And you only do that by trading one at a time. You get used to it, you understand the execution process, and then you can sort of put it together. And then when you get more experience, you can trade 2 pairs. Now, in that process, I would encourage you to experiment, right? Don't just use or Trendline Trader on all these things. Guerrilla Trader, right? So you can actually get used to using Guerrilla Trader a lot more because it is user friendly. Okay, and I mean it's the videos are there, the instructional videos. It is a great tool, especially as I said, if you're trading multiple pairs, but also if you're just looking to trade live, right? So say for instance, in this same scenario, I've got Euro up here and we're looking for a weaker Euro. So I could just come into Euro here, and this is where I'm talking about diversify your risk on this opportunity. So let me just come in here again. Okay, 10:24, 55 seconds. Okay, I can have an order in here, sell stop. So I don't want the top side on. It's going to expire in 10 seconds. Okay, so what I could be doing, I could be looking for a sell stop here in Euro. Okay, now if I had another Euro chart up here, which I don't at the moment, you could basically place T-Rex, get T-Rex up, and be looking to just trade at market, right? Buy or sell. If that was Euro, you're sort of sitting here waiting for the numbers to drop. And if I get my thing up here, okay, so what we should be getting is a Euro order on the downside here. Did I double check the time? It's coming up, 40 seconds. I was just wondering what the time was. So just with the settings on Guerrilla Trader while I'm here, while we're waiting, make sure use local time is true. That's your computer time, right? Otherwise, if you go false, it'll use the trading platform's time. And sometimes it's hard to work out what time the platform is on, okay, what time they're sort of using. So, okay, so in 10 seconds, we should get an order to the downside. So once again, I wouldn't need to be watching that. If I was actually just over here, okay, so you've got that other order on there at Euro. It's already there. I could quickly put up Sterling, Euro ready to trade live. Depending on what the number does, I can trade independently, right? I could sell if it was a strong US number. I could buy if it was a weak US number. And that enables you just to focus on one side of the market, right? In that situation, I'd probably tell you to just focus on a potentially strong number because if we've got a good trend line there, support trend line, you are looking to get into the market. If it's weak, that's what Guerrilla Trader does for you. And you can sit there ready to trade live to capture the move to the top side. Now, the situation where the markets have built up major pressure where, you know what, this thing could go either way, it happens reasonably regularly, okay? So this is something that you need to be thinking about quite a bit because as we go through and you get more experienced, you will start to identify these situations. And invariably, where would it happen? Well, it would happen on a potentially, if you're selling Euro or buying dollar Swiss, right? The pairs are quoted differently. So they're either going to do, this is like the sort of same situation, but the technical setup, sometimes it's better on the Swiss than it is the Euro. Okay. So you're looking to buy dollar Swiss on strong numbers or sell Euro on strong numbers, right? So that's something that you need to think about. Use the tools to your advantage. Do not abuse them. As I said, if you start spraying orders around the market, invariably you're going to get lost. If you were watching a trade I did a couple of weeks ago, I had three orders in play, and it was enough to actually confuse me. I had Swiss, I had Euro, and I had something else. And I think it might have been one of the cross orders. And I was trying to work out which one has been triggered here, which one hasn't. There was two that got triggered, and I was a little bit like lost. And I'm like, actually, hang on, what are the numbers? In that situation, it's a lesson to pull back, sort of wake up to yourself, get back in line with what is like a real opportunity. And that is just trading one number, as I said, to start with, but use Guerrilla Trader as a tool. If you're not in front of the screens and you've got a busy work day or you've got family outings, that's when you can use Guerrilla Trader. If you've got a good technical setup, ideally. Now, you can use Guerrilla Trader, as I just showed you, even if you are in front of the screens. And that's something that you should be looking to do and looking to put into play, practice as you get going, because once you've practiced it once or twice, okay, and you've made some cash out of it, it's going to be something that you will incorporate as a trading strategy going forward. Okay. And that's the luxury of us building tools like this, so you can capture trades in the market when you are not in front of the screens. But you know what? You can also do it whilst you are in front of the screens as well. Okay. Any questions there, guys?
Not for now. Thanks, mate.
No, it's pretty straightforward, right? That's just a straight up sort of lesson to try and show you when it works, when it doesn't. Don't go mad, because I've seen traders have success with this and then they start putting it into everything, right? Especially situations where there are no good trading or no good technical setups. And then you're gambling, right? So just be aware the tools are good, but you can come unstuck if you abuse them. Virginia, any questions?
No, at the moment.
All right, guys, good one. All right, we'll catch you later on. Don't forget the CPI live session on Wednesday. That's going to be a really key one. So hopefully we get something out of the US dollar, to get things rolling. All right, guys, thanks for joining me, and I'll get this training session up on the members area, which, funnily enough, is getting redone this week. It'll be a lot easier to navigate. You'll be able to find things and a lot of other goodies as well. All right, guys, have a good day. We'll catch you later. Cheerio.
Thanks. Bye.